Good morning, traders. It's Mark here from the Day Trading Room. The time is 1:45 in the morning on Wednesday. No, actually, here in the morning now, so it's Thursday, the 4th of November, the evening after Fed Day. I wanted to do a separate video specifically for the Fed Day trade because it is a completely different skill set, and you need to approach it slightly differently. Before we get to the actual event itself, just run through the one trade I did before the actual day, and that was this long here. Really, it was literally only because we drifted down. I was starting to look for a long around here anyway, and I really wanted to see a decent bit of a flush. If we're on Fed Day, then I'm not expecting. I know there's not certainty, nothing's a certainty, but I'm not expecting the market to get away from its perceived mean or value area, if you like, too much. And so we'd been happy in this area for a good hour and a half. The VWAP was flat; it was coiling around the gap up and down. Volume was low. It's pretty much as you'd expect on a Fed day. But then you get, the market then just starts to probe in one direction. Now you've got to be careful that you do get the flush and that you don't try and you second guess it. You need to really wait for that flush in volume, and then for it not to go any lower, for there, for the selling to be shut off and the buying to start. Now it's a different type of trade. It's not very aggressive normally. All you're looking for then is sort of a pullback to the mean, whether you're using a moving average or you're using a VWAP. But that's the sort of premise of the trade. Looking for it to push one way, get too far, and take the trade back in the direction where it came from. So there was my long. We had a good flush in the volume. Low tick reading, low of the day. That dot indicates low of the day. Get my marker pen out. That dot indicates low of the day. Decent flush in volume, and it just stopped. It consolidated here, and when it couldn't push any lower, it was a pretty low risk trade. The long was there, the stop was there, and I'm looking for the VWAP, and that's and as it sloped down, obviously the target decreases. Scaled off some as we pushed slightly up here. I think it was at eight or so ticks because it was just so slow. Held on to the rest. Scaled off another batch on here with the high tick of the day. Thought that might be my lot actually. Just tightened my stop up very slightly just below this guy, this low here. And final batch, tagged the VWAP, gave it a little bit more room, just in case we came back to the gap, but it didn't. It started to pull back, and so that was my exit there. So nothing fantastic, but a typical pre-key data trade, if you like. It's one of something I do look for. I look for the market to push in one direction. Nothing too drastic. Just a slow push. I don't want to see big heavy candles, but a slow push that just keeps grinding and grinding. And this was, it set up nicely because it formed a low, then took out the low again, flushed a few out, stopped, gave us all our nice flush indicators, and it was definitely worth a go for a pullback. So that's a sort of pre-data trade. Anyway, let's get down to the Fed. Pretty chaotic, really. Trade station was not at its best, I have to say. When the data came through, it did struggle. So I wouldn't take this tick reading as correct, because it did freeze quite a bit, and these candles, even though they've been readjusted now, they weren't quite as good on the other day. Anyway, what I'm looking for, well, Fed Day, you've got to be careful. First things first, reduce your size. Your risk is doubled in terms of ticks generally, so you're going to have to reduce your size by at least half. The last thing you want to be doing is taking a trade in Fed Day. It slams 20-40 points in no time at all. So you've got to be prepared for that, and you've got to be prepared that by the time you notice a move, your sensible stop placement is going to be quite wide, wider than normal anyway, for for intraday scalping and trading. So you've got to be aware of that, aware that your risk is increased, and position yourself accordingly. So what are the key Fed setups? Well, I'm not here to go through setups and highlight every setup I've got in my arsenal, but I'll just briefly say so we can understand the background when I come back and look at this video. I'm looking for a reprice. I'm looking for a move that surprises one side or the other, and I'm looking for the move then to continue in that direction. I have spoken about it before. So in the case of a reprice upwards, I'm looking for a push up to take out some sort of level, maybe that's a high or a resistance level or something. Looking for a push up, looking for a pause and a pullback, and then I'm looking for, there's my long, and I'm in, and I'm looking for a fresh high or a move back to the highs. That's the premise. Same on the downside. Surprise move, takes out some levels, pulls back a bit, and then a continuation in the direction of the move. Pretty standard stuff, nothing fancy there. That's generally what I'm looking for on a Fed day. I will be aware of fake outs, but you've just got to be a little bit careful because the distance is normally larger. So let's see what we've got. We've got a spike down initially, but it came back up pretty quickly. Now, when I see a tail like this, I don't forget these sort of moves pre the actual spike. This is the actual genuine spike. These are just maybe a little bit of rumour, maybe a bit of panic or whatever, but the book goes really thin. As you know, if you're watching Fed Day, I actually started to record the tape, but my machine couldn't take it. TradeStation was all over the shop, so I shut that down. That didn't work. Maybe I'll find a better way of recording that. Maybe I'll set up a camcorder on a tripod behind me or something. But I think it's a good thing to do that. I'd quite like to be able to go back and review the day as it happened. So maybe I'll look into that a bit more closely. Anyway, back to the action. Yeah, this was the actual announcement candle, if you like. Big volume as you'd expect. Straight down, but then straight back up. Straight down, straight back up. Which indicates to me immediate indecision. If that had pushed down, held, pushed down again, held, then you know that the reprice is lower and you're looking for the pullback up to get short. Okay, but if you're seeing a tail like this, then immediately I'm like, okay, they don't know what they're doing yet. It could just be knee jerk and we're looking for a push up. And when I saw this candle here, that's exactly what I thought it was. I thought that was the knee jerk, and now they're going to blow out highs and we're going to be, are going to have a good move. Now, the important thing to remember on Fed Day is that if you get on the end of a good trade, hang on to it. Do some scaling by all means, but lengthen your targets. It's not unusual to get a 100-point trade on Fed Day. Take your 10, take your 20-point targets. Really, 10's a bit short. 20-point on your first scales. Tighten your stop up. And then look for that runner, because if you do get on the end of a good one, you can hold it until the end of the day and you can really maximize your gains. Obviously you can see today wasn't like that, but you don't know at the time. So this is the action here that I'm most interested in, and this is where I got long. Now I'm going to bring up another chart here. I'm going to bring up the where are we? 250 tick. Now this is not something I will trade off. I know people who use it. Basically it forms a candle on every 250 ticks. It's it's a different way of forming a candlestick rather than every minute or 5 minutes, rather than time based. It's tick based. Anyway, basically it just shows you a little bit clearer this pullback. You can see it there. It's all a bit choppy on the 1 minute, but this is a bit clearer for the video. It's going to be easier for me to review a later date what I did. So yeah, this I assumed was a fake on the 1 minute. We pushed up. The main thing is for me is we took out this high. That was the key thing for me. It surprised people to the downside, didn't follow through, but took out a level of interest. So for me, that's the long. I'm looking for the long. We pulled back here and started to push up. When we've got that, I was quite late into it around here because this was a lot of action, and my stop was going to be here. So I'm looking for that, and I'm looking to to break new highs. So it's a pretty standard setup. It's the similar thing that I'd said. It's a move up, the pull back, and then the push in the same direction. It's nowhere near as clean as it is when it's when it's a one move. It's well into the highs and it's pulling back. If it had done that, I'd have probably been more aggressive with it, and maybe added as we broke the highs. But it didn't. It was a little bit of an untidy setup, but it was valid nevertheless because of the break, because of the pullback. I waited to see the tape come in, bang. You're always going to be a little bit late on the Fed move trades, but there's your long. Well, there was my long, should I say? There was my stop. It's about a 30-point stop, quite a lot really. And I'm looking to scale out into highs, which is what I did. And actually, I didn't quite get on the end of it as much as I should because these candles here. Let me get back to the 1 minute. That's the setup anyway, which is clear on that chart. Let's go back to the 1 minute because we can see what's going on a bit better there. It was a little bit. It wasn't as clean as it should be. I gave it chance. I scaled out some. I gave it chance to break through yesterday's high. I thought if it really gets going, then this is just one to hang on to, hold on tight, and enjoy the ride. We didn't get it. We had a big wick above yesterday's high, and I just came straight out as we started to come back. Horrible situation that you think, oh, and it was whipping around all over the shop. Just take 20 ticks off the table. It's nothing really, and those sort of trades, they're not great. But if you can take something off, then fantastic. Just as soon as you see it going against you, you've got to get out on Fed day, because if you start holding, you can see how far against me that would have gone. So that was the first trade. The second trade, a little bit different because of the choppy nature of it, and I think a lot of people thought we were now going to penetrate the lows, and so this became a really good double bottom situation. The volume was starting to dry off. It never picked up as we broke that low, and so it was worth a long. But then the trade had changed slightly from being a long to hold to take out highs to being a long to scalp back to the middle of the range, and so quick long there. The risk was okay, it wasn't too bad. It was about 20 ticks, pushed back up, and I was about here. I just judged it with my eye. 50% move back up, scaling up very aggressively all the way up, I might add. I'm not saying I took it all off halfway, because the choppy nature of it, move in your direction, scale, wait, scale, and all out. And it happened to be a lot of congestion there anyway, so it made sense for me to come out. We then proceeded to push up, but that was it. I felt as if I got away with it a little bit, especially the first one. Not a very clean setup, but valid nevertheless, and did okay out of them. Did okay out of them both, but the risk was quite large in the first one. Even the second one, the risk was fair, so the size wasn't great, but managed it by scaling out. Recognised that perhaps we weren't going to move into a big trend mode. We were chopping about, and it was a case of if you can get the end of the range, or the end of momentum, and it pings back in towards the middle, then great. I mean, if we'd have pushed out here, turned up, and then rolled over again, and then started to push, then it would have been game on again. Then we're going to probably be looking for some of the lower levels from earlier days to fill, but we didn't get that, and so we'll take it as we come. But the main important thing of Fed Day is you've got to manage your risk, accept your risk, reduce your size, accept that your risk is doubled, and just generally, if you can't feel that you don't feel you can get a read on it, it took me a few minutes to get a read on it to see what was going on, then stay out, because a lot of gamblers like to trade Fed Day. They'll come in, they'll get involved in it, and there isn't really an edge. And you've just got to pick and choose your setups. If there's no setup for you, then wait. You can sit out all of this rubbish, get rid of it, forget it, and then wait for it to settle into something a little bit more calmer, starts to push up, starts to generate a little uptrend, and then you can just hop on a little pullback there or something, and just grab a 10 ticks towards the end. No need to be a hero. So that was the Fed Day action. Looking forward to Thursday and Friday's trade. Should be good. Good trading, guys, and we'll see you with another video shortly.